Today's video, we're going to talk about a pretty important problem that I think many traders face, including myself. I've been trading for almost 18 years now, and whatever problems that you think that you have, I've probably faced them before and went through that difficult period. I'll jump straight into this because I want to give you the most value possible from this video. And as you can see from the title here, right, by the time you're on tilt, it's already too late. So we're going to talk about like what tilt is and how we can in fact prevent it, because personally I've experienced tilt like uncountable number of times throughout my trading journey and career. And I want to share with you guys some of the things that I have learned that are really helpful for me personally in terms of solving some of these tilt issues, right? So it's a prevention system and not another coping strategy. Okay. All right. So let's get on with it. This is a scenario, right? Like we know exactly what tilt feels like, right? So we start off the day well with a clean kind of like, okay, we take a $300 loss. It was a good setup. We hit our stops, no problem. And the next thing before we know it, we're down $800 in 10 minutes, right? And we can't explain like how the heck did we end up in the last 3 trades that went wrong, right? So the thing is that a lot of traders don't tell you this, but by the time you are on tilt, it might already be too late to fix it. Okay, it might already be too late to fix it. So everybody goes on tilt, and I think the important thing is like finding ways to create systems to prevent it from happening. Once tilt starts, it's already too late, and it's kind of putting on the seatbelt after the car crash, right? If we think about it, when during the pre-market, we are calm, we are very alert usually, right? We have a lot of willpower available. After one loss, we start to get a little bit stressed, and we feel like, hey, there's a little bit less willpower there. And then after 2 losses, that gets depleted. So telling ourselves to just like stop trading after a painful stop out is putting on a seatbelt after a crash, right? The damage is really happening. Relying on discipline is not going to work. Okay, so the answer that we're going to go for is like a kind of like prevention system, 5 layers of prevention to prevent tilt, right? If any one of these catches you, don't tilt. So number 1 is the state gate, right? Are you fit today? Number 2 is the morning prep. Load the plan before you see price. Number 3, mental rehearsal, and the failure scenarios in your mind first, so how to respond. People in the military, they do this all the time, right? They run different scenarios in their mind, right? They do red teaming. In business, you run different failure scenarios. You do the pre-mortem, right? As they call it. Post-loss protocol, right? Circuit breakers with real numbers that help you to really move on from the loss, right? And then finally is having very logical and emotionally acceptable risk limits set in place, right? So let's talk about the layers one by one. Okay, so state gate. What is a state gate? State gate is a very simple 30 seconds readiness check. This is before the chart opens. You want to check, for example, for me, this is what I use, right? Did I sleep 7 hours, right? Am I kind of emotionally neutral for the day? Am I kind of like clear-headed? Am I still bothered by yesterday's sessions, for example? And do I have a plan in mind on how I'm going to approach the day? Right. So these are some of the checks that I have in mind, and I execute this routine. Right. So if any of them fail, I will either reduce size or sit out entirely. So I'm very strict about the sleeping part. Right. So right now is that if I don't get my 6.5, 7 hours, I'm not going to trade. I'm not going to engage with the market, because time and time again, I've proven to myself that this is there is no edge for me to engage in the market when I don't have enough sleep. This is the moment of the day where you have the highest willpower. Use it well and use it to stop yourself from degrading and making bad decisions later. The second layer comes in the morning prep. So this comes, for example, I look at yesterday's key lessons. What did I learn from yesterday's market? Does that lesson apply today, right? So I look at the review I did yesterday. What was, for example, the easy money trades there? What was the key lessons learned from yesterday? And can I bring any of those to today's session? I look at my playbook rules, kind of like think about what is the setups that might be matching in today's market. What are the key levels from the reviews, right? And then think about the buyers and write 2-3 scenarios that I'm possibly keen to engage with. Right? Also importantly is think about my invalidation points, right? Where will I be considered wrong in terms of my read on the market or the buyers, and that tells me like I should either stop trading here or switch up model entirely. So you have no plan, you have no filter, and if you have no filter, your candle looks like a setup, and that's the very dangerous thing, very dangerous situation to be in. Right? So this prep is not just telling you what trade, it's also telling you what to ignore. Right? Most tilt trades they come from having no plan to kind of measure against. So third layer is mental rehearsal, right? And it's about running the failure scenarios before the sessions and not during, right? So for example, what are these kind of failure scenarios? Let's say I lose the first trade. What do? I walk through this with myself, right? So maybe I close the platform, take a 15-minute break and reduce at 50% size. So these rules will depend on you personally, right? And it can be different for every single person, but you have to come up with these things beforehand and rehearse them before the session itself so that you don't fall into the pattern of the dangerous pattern of just letting your autopilot take over. If I hit my daily loss limit, I will close the platform, close it, not minimize, no exceptions, right, and then walk away from the desk. If I feel the urge to size up after a loss, then I take the opposite action, size down, not up. Okay, so these are things that you have to keep in mind and rehearse. So by rehearsing this in my mind mentally and thinking about it, by the time the moment arrives, it's more natural for me to just take the right action, right? So athletes do this, pilots do this, surgeons do this, they rehearse failure scenarios so the response becomes automatic, right? So for trading, for high performance trading, is no different. We need to do something like that, right? Rehearsed decisions don't require willpower. And then we move to layer 4. So this is already during the trading session itself, right? And this is something I call the post-loss triage. And it's very important. And it's that after any loss, you ask yourself one question. Is my spot still ahead of me? Move to later or invalidated? So it's the kind of my read on the market. Why did this loss happen? Try to categorize the loss, right? There can be 3 kind of categories, right? So one is that, all right, I think the trade is still ahead of me. The timing was a little bit off, but I think the level and setup are still valid, right? This setup hasn't been consumed yet, right? The liquidity there has been taken. It can trigger a move. The move hasn't happened, or it might be that the higher time frame structure idea is there, but intraday seems a bit not ready. And this is often the case when you're trading, for example, Monday and Tuesday. Oftentimes, the moves are just not ready to happen during those days, right? You might have a certain high time frame idea, but price is going against you. Get out, right? Get out and just stay clear of the market when that happens, right? Either you flow with it or you get out. The last thing is validation, right? Regime shift. Okay, something is wrong, I read something wrong, conditions change, I probably need to rethink my thesis entirely, right? So it's important that after every loss, a full loss, a full stop out, you ask yourself this question, right? And think about, is thesis still valid? Is it still valid? Maybe you're too early, or is it move next session, and so on and so forth, right? So the answer will determine your next move and not your emotions. Too early, for example, hit or stop, price return to your entry zone, the setup wasn't wrong, but the timing was. So take a 10-minute cool down in those situations, step away from the screen. So these are things that you kind of create for yourself, right? Rules they create for yourself, right? This might not work for you, it might work for you, for me, for someone else, right? So you have to create your own rules that work best for yourself. One re-entry allowed at a reduced size. Same thesis, tighter execution, right? And then maybe at a slightly smaller size, 0.5 to 0.7 R. So the setup was right, but the execution probably needs some adjusting, right? So in other cases, it could be that the higher time frame is valid, but the intraday is just messy, right? And the price is choppy and in no man's land, and you can't find clear intraday structure trade. Stop trading the idea today, full stop, right? Or it could be that it's just like moving strongly against you, right? Just stop it. Stop trading it today, set alerts at key levels, and think about thesis and the story, and move from there. Sometimes the best trade is really no trade, and let the setup come to you tomorrow instead. Finally, regime shift, your read was wrong. Price, for example, churning around VWAP, market internals have flipped, and the structure you were trading has broken, right? So this is invalidated. This happens quite a lot. Especially for me, it's when I'm very confident sometimes of the market is going to do a certain thing. It often does the complete opposite of what I was confident in. So in those cases, your read was wrong, and you just need to accept it. And you need to kind of defensive mode, right? Know your positions, stop trading entirely, and reevaluate from scratch, right? Stop. So when conditions change, the best traders change with them. The worst traders will double down. So that's the kind of layer 4 there, right? Loss protocol. Layer 5 is interesting. Is where we have risk limits that work. Some people will think, okay, 1% of account, 2% of account, the number might be too big for you to mentally deal with it, right? So set a number that you can align with emotionally, that if you hit that loss limit in a day, you can walk away clean and there's like no tilt trigger. And you want to set this in advance, and you want to be able to kind of like rehearse it in your mind, right? So if you can't stomach this number during your rehearsal, it's the wrong number, okay? Obviously, these things, you don't get this process right immediately, right? So tilt days will still happen, right? Worst days will still happen. And these patterns are already in your history. So you can take a look at like, what are the days, for example, that you ran into like tilt, right? And what was the trigger, right? So look at your own trade journal, look at your own trading days. What are the days where, what were the days where you took on huge losses, right? Or huge swings in your equity? And what was the trigger for those situations, right? And what's the self-talk you had at that point in time? So understanding the pattern is very important, because this provides you with the data to kind of like think about how am I going to combat this? How I'm going to create rules and systems to prevent myself from even getting into that situation. You want to be able to kind of categorize your trades as well, right? Your trading days as well by your emotional state, right? So when you're calm, when you're frustrated, when you're chasing, you kind of realize that sometimes you have different win rates, right? So having that understanding that your edge is not just a system, but also your whole being, right? Who you are as a trader is very important, right? So the same trader can have very different performance depending on their emotional state and how they are interfacing with the market. This prevention stack, layer 1, the state gate, layer 2, preparation, right? Pre-market prep, layer 3, rehearsal, layer 4, loss protocol, layer 5, loss limits. To get to tilt, you have to go through all 5, right? So this structure helps you to prevent it, right? You don't need more discipline, you just need more structure. And thing is, trade better than yesterday, right? TBTY. It's a very simple app that I have built personally for myself to use, right? And this builds into my workflow directly, because I'm able to have my pre-market check-in, right? Go through all the steps, and there's a very simple voice review system where I just speak into the mic. It captures my trades, my ideas, and it just automatically generates my prep and my trade analysis, right? So it's very useful, simple, and I highly recommend you to check it out. It's worked wonders for me personally to help me save a lot of time and improve my trading, and just like extract so much more insights and create improvements for my own processes. Yeah, tradebty.com, right? Trade better than yesterday, right? Tradebty.com. Right now, there's a $9 per month kind of rounding rate. You can lock in that rate for life. But even if you don't want to go for the paid one, I think there's a free tier where there's 7 reviews and 3 playbook rules that you can have. Just very much enough for you to try out, right? You can try the AI kind of voice prep that helps you to understand your systems better. If you like, and I look forward to your feedback and thoughts in the comments. So trade better than yesterday, one voice note at a time. Thank you.